Brilliant. So, hi everyone. My name's Ian Brewer. I'm the EDI Community Development Lead for Bradford, for BDCU Credit Union, as we've rebranded, and we do a lot of work with the NHS, and we're looking forward to working with yourselves. And to introduce what the credit union is, about the payroll scheme that we have, and introduce a pensions webinar at the end of this. So hopefully that'll give you an overview of why we're very different from banks. Okay. So I've had to introduce myself, but my background is actually international community development. I actually grew up in Johannesburg in South Africa from the age of 7 to 17. And that gave me an understanding of communities and cross-cultural work. Came back to the UK and got involved with the YMCA, which took me off to India, Nepal, Bangladesh, Sri Lanka. So I did international community development work there, and then I've also worked back in South Africa with the British Council in the late 2000s. And in between that time, I've been working with the credit union here in Bradford. And so the cost of living crisis, I think we're all familiar with that, and it's not showing any sign of letting up anytime soon. We thought we would all be through the cost of living crisis by now. It's been trundling on, certainly since 2022, if not before that. And various mayors and councils have tried to do various different things to combat that. Rising inflation, the Bank of England borrowing costs keep going up. Mortgage costs have risen, of course. People have limited emergency saving or none at all. The rising reliance on credit, which we're seeing coming through. Poor access to affordable borrowing, and the impact of well-being and mental health of financial difficulties. And that's where the credit union steps in. So we're very different from banks. Banks were set up and their business model is borrowing. They advertise savings, of course, you can save with them, but they don't need savings because they have investors that do that. So whereas the credit union, we depend on savings. If we don't have savings, we can't do lending. So our business model is a savings first model, and then we lend to people, and from that, banks have a borrowing first model, and you can save alongside them. Very, very different models, and the reasons for doing so. So our credit union was set up in 1993, and the story goes that back in the early 90s, with the recession of the early 90s, staff at Bradford Council couldn't get loans from their banks. There was a credit crunch going on, couldn't get loans for love nor money. And staff were talking to HR. HR were looking at how they could help staff, and they decided to set up a credit union. And all a credit union is a group of people saving together to lend out to other people. It's a peer-to-peer lending model, if you like, and we're a cooperative. So we don't pay interest on savings, we pay a dividend, and the dividend changes from year to year. But because of that, we do a lot of work with Muslim and mosques. And we do a lot of work around that, because we pay, the dividend is halal for savings. So people can save ethically with us without compromising their ideals. As far as the dividend is concerned, it never sets the world on fire, but you have the comfort of knowing that if we've made a profit that year, you'll be able to get some money back for it. If you are the sort of person that chases the rate, then maybe the credit union isn't necessarily for you, but your savings go towards helping the community instead. So that's the difference. And a lot of people use us as small savings alongside their other savings, because it's instant access and you can save through your payroll. So going back to the history of ourselves, back in 2015, 2016, we were one of the first credit unions to go online. So we're still online now. We have a smartphone app. And if you go on to App Store, put in Bradford Credit Union, you'll be able to download the app. You can check your balance and move your money out of your credit union account back into your current account, which is how 97% of our people do that. And then also in 2016, the council decided they wanted a financial inclusion officer. Now, I'd done, in my background, I'd done banking as well. So I was with HSBC for 7 years doing wealth banking, business banking, and launching the basic bank account. So I had quite a lot of experience in that before I joined the credit union. So this was the perfect job for me because it combined community development and finance to create the unique model that we have today. So we are now the leading national credit union doing a community development model. 2019, the government came to us and said that Kirklees didn't have a credit union either, would we extend? So we cover the corridor from Huddersfield right up to Skipton. We cover Kirklees, Bradford and Craven. What's been interesting, the membership growth. So up until 2016, we were 3,000 members. I meant to update the latest stats because we're over 12,000 members. We added 1,200 people last year, and we're on course to adding another 1,000 this year. Now that's because we're getting people into that all-important savings habit through community development and also working with our payroll partners. About 5,000 of our 12,000 people are financially excluded, couldn't get a bank account anywhere else, couldn't get low-cost lending anywhere else, and faith-friendly, as we've just mentioned. Now, I wonder if I was to ask you if how much 12,000 people in Bradford, Kirklees and Craven would save together. So one big pot, how much of that is savings? Most people guess anywhere between 100,000 and £1 million. Well, I'm glad you're sitting down today because we look after a staggering £6.5 million for 12,000 members. Bank of England have recognised us as being one of the highest savings in the area of deprivation because we get people doing what they can't do on their own. They can't get into that savings habit easily. That's why we use payroll schemes and we use benefit schemes and also the community development schemes to help people to do that. We have the Money SOS workshop, and this is where I'll just go through some terms that will help you and your clients understand money better. So I do this as an hour-long workshop, but we'll take some time to give an overview of what these terms mean. So because I came from a banking background into credit union, I developed a program which we call Money SOS. So this is a workshop that's 1 hour long, free of charge, and I can do that with you as staff or your clients or anybody else like that, because it really does unlock what we call the mechanics of money. And that's become so popular now, we have a radio show. So I have a Martin Lewis type radio show called the Money SOS radio show on BCB radio on a Friday at 6:30. So let's go through what the Money SOS entails. So what is APR? Well, you have to probably tell me that APR stands for the annual percentage rate. But what does that look like in a common garden variety? Well, your average bank lends between 6 and 20% based on your credit rating. So that gives you an idea. Your average NatWest, Lloyds, HSBC, they lend anywhere between that. But would you be surprised to know that it's estimated that only about 40% of the UK population can get a loan from the banks, because 60% do not have a credit score high enough for that. So banks make most of their money just on 40% of the population. They're quite happy to do that. They've got no incentive to make money elsewhere. So if you're one of the 60% that can't get a loan from your bank, one of the cheapest options is a doorstep lender. People come knocking on the door, offering a loan of £500, which they pay back on a weekly basis, usually door to door. Their rates start at 272% APR. Now, if you put that into context of £500 over just 1 year, that's £410 of interest. That's a £910 loan for just £500 over just 12 months. And that's what people are facing in your communities. And if the credit score is not high enough, that's what some of your staff will also be paying in those sort of regions, which is one of the reasons why we talk so much about unpacking what APR is. Then we look at payday loans and high cost credit, which we've done. Payday loans is a loan you take for a short period of time. You're stuck during the month. You take a short-term loan, which has interest on it and fees. Often people can't repay it at the end of the month. It rolls into the next month, and that's where it accumulates and gets really high and very, very quickly. And then you've got your Klarnas as well, which might seem 3 months spreading it across. Most people can't pay it back within 3 months, and that's where it turns into high interest and working through on that basis. As we talk about contactless, so I was in the banking world when, if you remember the PPI scandal, most of us will remember the PPI scandal, an insurance put onto a loan the banks sold to people that didn't necessarily need it. But when that scandal hit and banks had to pay back billions, they were scratching around for a new way of getting income. They came up with contactless. So contact is to help the banks, it's not to help you. The idea was that people would lose track of their money much more easily than if they use chip and pin. If they lose track of their money by using contactless and beeping throughout the day, they're going to use the overdraft. Banks make more money off overdraft than they do off credit card debt and loans combined. It's a real money spinner for them. But the problem is that if people go into overdraft, especially if it's unauthorized, that starts to impact your credit score. And if you've got an authorized overdraft and you continuously use that authorized overdraft, that's called living in your overdraft. That will impact negatively your credit score, because you're telling the credit agency that you can't handle your money. You keep needing to use overdraft. Overdraft occasional use, absolutely fine. Being there every month, that's not okay. That will impact your credit score. If you don't have an authorized overdraft, or you go over your authorized overdraft, that's where the money really starts to kick in. That's basically 40%. There are charges alongside that, and that's where it starts to really accumulate. But most importantly, banks register that with the credit agencies that now you can't handle your money, and that starts to impact the credit score, which is why 60% of the UK can't get loans from their banks. So that's the Money SOS course. I know we've gone over that in very, very quick detail, but it's a sort of mechanics of money. I go into that more detail in an hour-long workshop. If anybody's interested in me coming to talk to staff, that may well be of benefit. How we get people saving. We do this in various ways. The most important way, and this is where you guys come in, is our workforce payroll savings. Excuse me. So the barriers are already there. 1 in 4 staff have major money worries. 1 in 8 staff live in poverty and known to employers. 2% of workers have turned to high cost credit, as well as loan shark use. And as the cost of living crisis hit, people in the 30,000 bracket are coming under pressure and starting to see their credit scores decline as well. So it's not just for people that are financially excluded, it's everybody's feeling the pinch from this crisis. So one of the solutions that we have is the payroll savings, which is the payroll deduction scheme. And I really hope that each person on here would look into that, because for a minimum of £13 a month, you can join up to credit union and you can save that. Now that's all your savings. There's no fee for us holding that. And as we've said, it's instant access. You can take that money out whenever you want it. The advantage is that we use the pooled combined amount of savings from our payroll people, and we lend that to the financially excluded. So your savings stay within the community economy, helping people there. So we have over 4,000 staff saving and borrowing at 34 companies. We launched last year with your NHS. We've also got the BRI. We've got the Care Trust and yourself as Airedale. And we also work with the other staff that part of the private company that you have as well. So we have 4,000 staff at 34 companies, and they help us to lend to people that are financially excluded. So you're making your money work hard for you, but you're also helping the community at the same time. So I'm hoping that some people today would be joining up for that. Then we have the reason why we won West Yorkshire Financial Awards for Lender of the Year. Now that was an exciting night because the fact that we were shortlisted was amazing in itself, but we were up against HSBC, NatWest nationwide, and we walked away with Lender of the Year award. And we won that partly because of a unique scheme that we've started. Now we already have what's called the family loan, so people can pay their child benefit into the credit union because that's a savings payback scheme, and they can take a loan against that money coming in, and they automatically paying back through their child benefit, and they save the rest of it alongside. That was an innovation we brought in during the pandemic that we were known for. But about 18 months ago, Tracy Braben came to City Hall to see Bradford Credit Union. And one of the questions she asked was, what happens to people if they can't lend from you? So your banks have a credit score limit. Credit unions have another credit score limit. Below that limit, the Bank of England will not allow us to lend to those people because we're putting members' money at risk. It's too high a risk. So she was asking, well, what happens if they can't get a loan from you? I said, well, they have to go to high-cost lenders or payday lenders or even loan sharks. There's not a lot we can do about that because we're preventative. She said, well, that can't be right. Can you look and see if we funded a program and designed a program, could we help those people? So we put our thinking caps on, spoke to the Bank of England and said, look, we want to run a pilot scheme where we take people with ultra low, shockingly low credit scores, and we want to lend them £250 with a savings incentive, £10 at the start of the loan, £40 at the end if they're able to repay that back, give them an incentive to do so. Now we modelled that 60% would not pay back their loan. So we took 300 people and we modelled that 300 people, of the 300 people, 60% would not pay back their loan. They've got a history of not paying it back. The chances are that they wouldn't. Turned out to be only 27% didn't pay back their loan. That means over 200 people did pay back their loan. And because it's a credit builder type of loan, the reason why we help people do that is because you can only build your credit by having a loan, which is one of the ironies of the way the credit rating agency works. So by helping people get a small loan, pay it back regularly, we send positive data back to Experian, and we were able to help 200 people restore their credit score, so they went back into mainstream lending. They could lend from us, they could go to a bank. It was a great way of doing that. So we sent all those stats back to the Mayor and the Bank of England. And then she came back to us this year, and said that she wanted to refund it. So we got £300,000 to run 3 tranches of 300 over the next 3 years. So that's nearly 1,000 people we're going to be able to help. Now there's a tranche of 300. We've got 90 people left. I'm going to put the link in the chat, and if you know of anybody that's got poor credit history, encourage them to take a loan with us to be able to build that credit score. And then we've got Food Savers. So this is our flagship savings project. So during the pandemic, the plethora of food banks opened. Everybody was opening food banks. So the government was giving money away to set up food banks. And we were talking within churches who run the providing the food banks with their food. And she came to us and said, look, we're teaching people that food is free. It's not. And we're giving them food that they don't necessarily want in bags. What I want to create is a pantry style model where people go into a corner shop experience, they choose the food that they want with dignity, and they pay a contribution, £6. And one of those pounds, she said, we'd like to go into the credit union. So we set up a new scheme, never been done before, where people would be able to do their shopping and save into the credit union at the same time. Now, what was interesting is that was 2 years ago. We've just gone 1,000 members. We've got 24 pantries set up in the most deprived areas of Bradford. People have never saved in their lives. They put their £1 in, but more than that, they changed their behaviours. And they were bringing the money that's under the mattress in the shoe boxes. They were bringing that cash down to the credit union as well. But they don't trust banks. And what we've seen is for 1,000 members, they've saved over £80,000 between themselves. It's an incredible amount of money. People have never saved in their lives, and they store that up with it as well. And that comes to the end of my presentation, but I'm just going to go back to this one here, and just to reinforce that we are now the community development credit union model for the whole of the UK. By having your payroll savings here, it's very little to yourselves. You can save up to, most people save £25, put it into the credit union. But because of the changes in the banking crisis of 2009, Bradford Credit, the BDCU Credit Union, we have to have money sitting in an account. Can't do anything with it because you might need your money back. So the government says, Bank of England says you can't lend that out. So we're always under pressure to get more savings in to get more lending out. So for every £10 that comes in, releases £10 at the bottom to lend out. So that's why we're encouraging people at the NHS or all of your branches on that being able to save with us, because it really does help for that. And if you ever did need a loan, you can come to us. We lend up to £25,000 and we lend from 7.9%. You'll struggle to get that rate even in the high street banks. And that's something we're proud of because we're not linked to the Bank of England rates. So that's enough from me there. So I'm going to stop there, stop presenting. Got a couple of other things to talk about, but I want to get a little bit of feedback because we've got the time. We've only been on for 20 minutes or so. Has anybody got any questions about that? Anybody want to ask a question? Okay, let's use a show of hands. Did you find that helpful? Just raise your hand by hitting if you found that helpful. Okay, great. Okay, well, I'm glad about that. And yeah, I hope that you're able to tell your friends and family about what the credit union does, because we really are unusual and innovative on that. So the next thing I want to talk about is the BDCU pension scheme. So I'm going to share my screen again. Oh, sorry, Maxine, you've got a question there.
Sorry, Ian, I didn't take it off again when I was saying it was very interesting, and I don't know how to get rid of that. Oh, I've done it.
Oh, that's fine. Okay.
Sorry.
That's all right. No, don't worry about it. Yeah,
I
absolutely
do
fine.
remember your presentation last time, and I found it very interesting. It is
Oh,
really,
good. Okay.
yeah, it was really, really good. Well, and again,
Well, thank you, Maxine. I do appreciate the feedback. Right, let's just take you to this then. So we have a money and pension webinar. And this is on Tuesday, the 22nd of September at 1 p.m. So the link's in there, and I know Vanessa's sharing it. We had 300 people sign up for the one we had in March time. And what we've got is the money and pension service coming on to help you to understand your pension, planning for the future, tracing old pensions, practical money tips from ourselves. So if you want to come along to that, you're very welcome to do so. And I also then want to go to the BDCU website. So this is our website. And as a payroll partner, we've got the information here if you want to find out more about joining us as a payroll partner. If you are interested in joining, hit the join button and pop your details in there. If you have your payroll number, your driving license and your debit card to pay your first £5 deposit in, you'll be able to join us from there.